Stacks is up over 27% in the last 24 hours, and it still shows some potential for further moves to the upside. In today's video, we are, of course, jumping into the technical analysis on Stacks, sharing my thoughts and opinions on where I think this altcoin is heading. Let's roll the intro and get right down into it. Hi guys, welcome back to another update video, and today we are taking a look at the technical analysis on Stacks. Here we have Stacks paired up with USDT. We're on the 4-hour Binance chart. So STX has seen some pretty decent growth, as I said earlier, and we actually saw a low today of $2.43.707, and this actually then rallied up 30.83%. But if we take the close position yesterday, it's actually 27.32. But nonetheless, some great progress to the upside has been seen here. Using the 50 EMA and the 50 SMA as great areas of support for the last few days, you can see it's really taken off since dancing around and ranging this market just between the 50 EMA and the 50 SMA. So the red line, guys, is your EMA, the 50 EMA, and the yellow line is the 50 SMA. The 50 EMA, the red line, coming in at 262.52, and then the yellow SMA is coming in at $2.65.33, and we've rallied up to over $3 now. The 200 EMA is lagging behind all of that, coming in at $2.1708. That's the white line there. Now, what's interesting about this is we see some great growth since the 23rd of January. Okay, now this move down here was actually below our 200 EMA, and then we started kind of trying to get a confirmation, and we got confirmation over here. We could have really got in earlier over that side, I guess, but if we really wanted to wait for a bigger kind of close candle above the swing high, then it would have been around the 8th of February. But nonetheless, if we were able to kind of get in nice and early here, we've seen some pretty decent growth since the 23rd of January of 156%. This is one that Chris has been dollar cost averaging into, and one that I'm not yet to kind of dive into myself, but one I'm looking at with immense interest. Now, in here, we can see some interesting things. I'm going to go ahead and draw some trend lines in to start with, just to anchor in our analysis a little bit. Here you can see that we were finding great areas of support, and this is now miles left behind. We might want to refine this a little bit. We have a very, very bearish, I say bearish, it's not necessarily overly that bearish, but it does give us some room for concern. A really steep support line being found here. Okay, steep support lines like this, unfortunately, do have a tendency to want to break on down. So we want to be mindful over that. Now, in terms of our trend line on the upper side, well, here we can actually see this kind of expanding out, and that's actually a positive, because it will mean that you might have some bigger swings in the market, but they will be holding their own. And so we think of this more as a megaphone pattern, but I do think we are running out of steam with this one, so I want to be a little bit mindful over that. Let's go ahead and take a look at where things could potentially be going. Now, here we can see great lift from our December 2022 lows. Okay, so let's go ahead and first of all measure the distances here, because this was a pretty significant run, and right now we're just testing basically just above the 1.382 of that initial surge to the upside, specifically after we had this move to the downside where we found our low. If I can get that, which I'm not going to be able to, can I? There we go. Oh, I almost had it. These wicks, there we go, 40.16 cent on the 17th of August, right? And if we take our fib and we actually measure the distance of our latest run to the upside, you can see that we're right inside what I would class as the expected range, which would be right in here. This would be basically between $2.57.95 and $3.99. Okay, this would be the area of expectation. Okay, so we can see that we're right up inside that little range from our initial lows of December 2022, right? That initial surge to the upside. here was met with a nice retracement down towards our 40.16 cent. And then we saw this lift off right up into our range that we would normally expect. This is what we would class as a three-wave structural point. Okay, I'm not going to go into the Elliott wave because I know that many of the audience don't fully understand it, but essentially that would be where you'd be heading. Now, the other thing that I've noticed in here that I find interesting, and again, you need to use the Fibonacci retracement tool for this. Take this swing high here and the 40.16 low, which I'm just going to have to zoom in and get. Here, we could see this actually break out above my normal expected range and head out more towards this 1.618 at $5.65.52. Now, that is no guarantee. This particular, I'm going to go through the pattern and the reasoning and the rationale behind why this, but it has a low probability of success. Okay, so I'm going to go through and show you why that is a scenario that could potentially be playing out. Okay, and we're going to connect these 2 points right up here, the high from 20th of March 2023, and then the high over here on the 9th of January 2024. We put our low in at our 40.16, okay, and that is a cup. Then, of course, we have a little handle. Now, the handle I don't like overly. It's not the best handle in the world, but it is right in here. And its retracement, as you can see, does not go down to the 50%. If it did come down lower than 50%, it's invalid. I don't like the handle here because it's very sharp in the way that it lifted out. I would prefer a more curved handle in the same way that we have with the cup. So it's one of those, right? This is a long shot scenario. A cup and handle targets out 1.618 with the depth here. So we are basically looking at that $5.65.52 under this scenario. It's not one that I personally think is likely to play out, but it's worth noting that we had this cup and handle pattern playing potentially a part to this run to the upside. Now, for the most part, I'd take a look at our structure and I think about it more not as a cup and handle, but more as the three-wave pattern. And I take a look at our structure here, and it looks like we're nearing completion, meaning that this area is more than likely going to hold, okay? Meaning that that kind of peak really between 259 and 399 is likely to be the area where we actually find ourselves getting rejected. Okay, so all eyes will be on the 50 EMA and the 50 SMA on STX here as to whether or not they hold. They don't hold the 200 EMA, and if you can't hold that, then we are looking for a break to the downside. Now, given the fact that we have this new area of height, we can actually be a little bit more potentially predictive over what is going on. I'm going to lift this up to a 12-hour time frame just to give us a little bit more room to kind of see what is going on. You can see that we're up against this upper area of resistance, okay, and I'm going to give this a little bit more breathing room. I think I'm going to take this one here and this one here, and I'm going to show you all of this range right here. Okay, so this range, basically $2.30 to $3.25, is previous area of resistance. Resistance over here in April of 2021, resistance over here for the all-time high in December of 2021, and the retest of this area. This is this area is highly likely to be an area of resistance because people who were trapped in their positions and maybe didn't sell can now get out at cost neutral. So this is going to be an interesting point where we potentially do see a rejection. If we can get breakthrough and we go into price discovery, then this area of previous resistance could then have a breakthrough and a retest as support. Okay, so we come back down and we buy in this range before we take off. Okay, so it's going to be interesting to see how this one plays out, but it's looking very, very good. It's looking like we are testing out the idea of new all-time highs, but it does look like it is reaching its upper area. Again, this area that I was just talking about, potentially up towards that 399 new all-time high, would be at the end of our three-wave pattern where we look for a cooling off before we launch again. Long-term projections on this one are very, very good, but I'll save that for another video, so do watch out for that one. And guys, I think that's going to wrap up today's video on STX. If you found it useful, smash the like button, and why not subscribe? Join us down in Discord. Links for that are all in the description below. And why don't you check out this video right here where I'm discussing what is going on with 𝗕𝗘𝗪𝗔𝗥𝗘, which has also had a fantastic run to the upside.